Hello there. Welcome to a special post-election 2020 edition of Be the Boss of Your Money. We've got a lot of things to talk about today. We're going to make it fast because, I know you've got places to be. I've got places to be, and nobody wants to watch me for a half hour, apparently. So I'm going to try to see if I could do this in let's see, can you give me 15 minutes? Okay. 15 minutes. It's an important episode because what changed? I mean, we're talking about all the time here on Be the Boss of Your Money about personal finance, investing, business talk, but ultimately it's about you being able to reach your financial goals one day. So as far as personal finance goes, did something change? Is this election groundbreaking? Or was the election the least of which, just make sure, or was the election the least of which is important? Maybe it's the fighting, the infighting, the divided nation, everybody fighting on Facebook. A lot of things change, and a lot of people feel very strongly about their positions. So I'm going to first start this episode in a way that I never have. I want to say how grateful I am for all of you. Certainly, I'm grateful for anyone who takes the time to watch my live streams, my videos, reads my content. I hope you find it very educational. Okay, that's what it's all about. Be the boss of your money is about really helping you be the boss of your money, not your money to be the boss of you. And you need to arm yourself with personal finance knowledge. And it doesn't really matter at what stage of life you're in, because I talk about Medicare and trusts and estates and estate planning and all kinds of things, and as well as just getting started and dollar cost averaging. What I want to do, though, is thank you. I want to thank all of you for participating. I want to thank everybody for going out and voting, regardless of whether I agree with you or if anybody else agrees or disagrees. That doesn't matter. What matters here is that you participated in a democratic process, that you have passion for what you believe in. And I, my friends, really enjoy being with people who are passionate. So disagree or not agree with any of us, I am very grateful to all of you for taking part in this incredible experiment called the United States of America. So today the rally continued. Yesterday we had a big rally on the day of the election. It continued today, but the Dow, while still up over about 1.34, 1.35%, it still is, the upside was less than half of what it was earlier today. Is this a harbinger of something to come? We're going to get into this. We're going to talk about the election. We'll take a quick look at the market, and then we will talk about why stocks went up, gridlock, things like that, because I want you to reach your goals. And I think it's important for you to know about these things, because if you do know about these things, you become a better investor. You have more stick-to-itiveness, and that is really important when it comes to investing. So let's roll the quick intro, and then we're going to get into this. Hello, thank you for joining me. I'm Mitch Goldberg. If you're just joining us right now, I'm Mitch Goldberg. The name of this show is called Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you. I've got a couple things to talk about. First and foremost, if you're a viewer of this live stream or in the replay, you know that I've been consistently saying I'm not making any changes at all with my clients' investment portfolios because of the election. I base investment decisions on my clients' personal finance needs, their unique situation. That's what this is all about. So I just want to play a quick little something just to give you an idea. I kind of like a humble brag, but I just want to put things in perspective. So just check out this clip real quick. The election is only a few weeks away. It's definitely at the hold your breath moment. I'm actually not taking client accounts and shifting them one way or another into more stocks or less stocks or more bonds or more cash. Like all the other financial advisors, we're going by your own personal finance, your time horizon to when you'll need cash. We want to be as tax efficient as possible. We want to make sure you have your estate plan updated, your beneficiary designations updated. There's a lot more to it than investing. Okay, let's take that down. So that's basically the gist of it. For personal finance, the election doesn't change anything. You want to spend less, save more, or if you want to spend more, then make more, but make sure you don't just keep making more and spending more, because what happens is you just go into something called lifestyle creep, and you need to keep investing and make sure you updated the beneficiary designations of your insurance policies, retirement plans, etc. We're talking about personal finance. So the basics of personal finance, which is really what you need to succeed, it has not changed one bit. But we are all stuck on the election. It's all we can talk about. It is the day after the election. I saw news that just came over the tape that Michigan is giving it to Biden. He did it in Michigan. He did it in Wisconsin. Both of those are going to be challenged with recounts, from what I understand. So we're not out of the woods yet as far as having some finality and knowing who our president is going to be. But there are a couple of things that the market rallied on today, which change, I think, a lot of trends that we're all talking about going forward. So let's just do a quick share screen, and boom, share screen. So as you can see here, the Dow is up 367, but it was up more than 800 points earlier. And I hate these days when you have these giant rallies and then, more than half of it is given back. I would rather a smaller rally that holds than a big rally that fades, even if it still ends the day with a rally. S&P up 2.2%, but the big winner in this is a rally that really held. NASDAQ up almost 4%, small caps barely up, and the VIX crushed today, which is a good thing, below 30. We'd like to see that get below 25. That is the fear gauge. The lower it goes, the more optimistic investors become. That's how we interpret that. Let's take a quick look at this chart. I think this is really, really cool. Let's just go by this one, but all these look the same. You see a big dip from Monday, October 26th, to a recovery to today. Okay. And if you take a look at this was the last, week before the election. Stocks tanked. We had a really tough week, and people were saying, this is because it's going to be a blue wave. This is because Biden's going to raise taxes, or this is because Trump could win and, his policies might not be good for the market. Everyone's predictions basically are more or less, for the most part, I think, predicated on how they feel without real data. That's something we've been speaking about the last week, the last few months. And then the rally came back. And this is why I say I'm not making any changes to client portfolios, because you don't know. I mean, maybe the market will be up, maybe the market will be down, but don't make any changes just based on the election. There are so many reasons why stocks go up and down, and quite often we don't even know what the reasons are until after the fact. I mean, we love coming up with reasons right away. Oh, the market's up because we didn't get a blue wave. It's up because we'll have gridlock. That's the story for today. Maybe we'll find out something in a week or two, and we'll look back and say, aha, that's why the market tanked last week and went up this week. But investors are really trading. If you look at these charts, the S&P, the Dow, and the NASDAQ, investors are really trading heavy duty on emotion. And emotion is not a good way to invest. And if you just ignored the volatility for the last week, you would not have even known. If you turn off the lights a week ago, came back today, you would have said, yeah, the market's up a little bit. whatever, no big deal. And that's what I mean by people are making decisions based on emotion. So today, what rallied? Healthcare, communications, technology, communications and technology ETFs. These are the major 11 ETFs that represent the 11 sectors of the economy, according to Standard & Poor's. So healthcare was a leader because now it's believed that if you didn't have a blue wave, we're not going to get price controls in the drug industry. Tech went up and communications went up because even if Biden wins the presidency, which we're not 100% certain yet, but if he did win the presidency, it doesn't look like he got the Senate. The Senate still majority Republican, it looks like. So he won't get as much stimulus through as he had hoped. Less stimulus means slower economy because, stimulus is good for the economy, at least short term, which means the stay-at-home stocks really, really took off. And that's why the NASDAQ was up almost 4%. And the Dow Jones Industrial Average was only up, like 1.35%. Okay. And then you look at the bottom performers, building materials, XLB, financials, industrials, they were laggards. Industrials and financials are laggard when you have a really big rally, like JP Morgan was down today, Citigroup was down today. That doesn't tell me that we're in for a better economy. What today's market tells us, and this is just a snapshot, okay, at the closing price at 4:00 in New York, just a snapshot, that people think without all the extra stimulus that the economy is not going to accelerate as quickly, maybe that the COVID is not going to get under wraps as quickly, and things are going to be slower, and we're going to be working from home more and maybe social distancing more. So the big techs had a big rally, and that's what carried the day. If you took some of the tech stocks out of the Dow wouldn't even been up as much as it was. Okay, it would have been a much slower day. And the really special news today is I find this quite heartening, is a company called Biogen IDEC was up 44% today. That is a huge number. And this is not some little, micro cap biotech stock. This is a pretty big biotech company. And they received news from like a panel that suggests what if drugs should be approved or not to the FDA. But their Alzheimer's drug has shown to be effective. It works. And this could be the answer to so many dreams and the solution to so many nightmares. And it's, Biogen IDEC. It is a stock that is a stock owned by many of my clients. So we're very happy about that. But more so than anything, I am just ecstatic about having a new Alzheimer's drug on the market. And keep in mind, this is November, still in the beginning of November. This is, November is Alzheimer's Awareness Month. So just an incredible thing. So I'll stop sharing the screen. Let's talk about the market and if anything changes for you. The changes going forward were expected that if there was a blue wave, blue sweep, it would be good for alternative energy, solar, wind. So some wind came out of the sales of those stocks. Hopes were that maybe we would have a massive stimulus program, maybe even $3 trillion with a blue sweep, because that was the HEROES Act that the Democratic House of Representatives proposed about, I guess about 3 or 4 months ago. So maybe we'll get a $1 trillion to $1.5 trillion stimulus package, which is still pretty nice. But a lot of people feel that is not big enough to really bridge the economy to a time when COVID vaccines can be widely distributed. So if anything, I think maybe we'll start to see the markets give back a little bit of the recent 2-day gain. The other reason I think the market really rallied this week so far is because of something called a short covering rally. People oversold stocks, worrying about politics, worrying about the election, worrying about uncertainty. Um, Investors got overly negative, and we just had a very big bounce, which basically matched the retreat of last week and the week before. So this is just really outsized volatility. And I don't really think you can read into a trend here because it looks like we'll have gridlock. The progressives won't get the costly programs that they want. The Republicans will get some programs, but won't be as costly. But they won't be as what's the word I'm trying to curmudgeon as maybe we thought they would be. So there could be some compromise, but we don't want a lame duck president for the rest of this year and a lame duck president for the next 4 years. We would like to get some things done. So that's what basically the gridlock is all about. It's just we kind of plot along. We don't want sudden changes and changing estate plans and tax law, et cetera, because what happens is if you keep changing these things become noise. They become they become a weight around the market's neck, and it creates more uncertainty. We want stability, and we want corporations and consumers and business owners, dividing people into those three categories, to we want all three of those parties to have certainty in what to expect in terms of policy, so that all of them can go and do the best they can for themselves. All right. So that's the story. I'm not reading anything into it. Some of the trends we had hoped for, like today, small cap stocks were really weak. The reason small cap stocks were the weakest part of the major averages that I follow is because we probably won't get as big of a stimulus package as investors had expected. And since small cap stocks are much more economically sensitive to the economy than large cap stocks, it became a trade of it became a trade of less enthusiasm for small stocks and more enthusiasm for the large, work from home, stay at home tech stocks. So that is the deal. I'll be back tomorrow. Thank you so much for watching, and I'll see you. No, again, I'll see you tomorrow. Thank you.